for Robert, we've got a bear call credit spread. February 18th expiration. Bought the 275. That makes sense. And sold at 272.50. All right. February 18th expiration on Snow. We're going to sell at 272.50, buy at 275. Let me get your prices right. 631 and 693. Okay. And I am just going to leave this. I'm sorry, yeah, 631 and 693. We're just going to leave this as one contract to keep the math simple. 62-cent net credit on a risk of 250, or a true risk roughly of 188. We keep the $62 no matter what happens. So even if we have to close the position out for the full loss of 250, which he's getting close to right now because the stock is above both strike prices, not what we want to see in a bear call credit spread, as in a bull put credit spread. We don't want to see the stock in that situation as well. We don't want to see it below both strike prices. Normally, when it's above both strike prices, the rolling and adjusting can be difficult. You're nearing the full loss on the position, just as we saw earlier with the discussion on the long call. Robert, of course, you know that. We had a great discussion the other day with some other positions that were similar to this. Yeah, big jump here for Snowflake there, 19. It's been bouncing all around. I think that's why Mirage asked the question, because he was pretty bullish on it. And he wanted to see what the best maybe protective structure was. Long story short, here we are in this position. And as I discussed with Robert, what are some of the things we might consider? Well, now that it's moved up so much in this case, the discussion we had yesterday of just buying to close the short and leaving the long open is going to cost a pretty penny, and you've only got 14 days left to go. As always, let's check it out. It's going to cost me $16.40, $16.35, somewhere in that range, to buy to close this call. What does that mean? It means now I'm holding a 275 call with a cost of about $15, $15.68 for the next 14 days. Static break even is at 290. Well, we moved up 20 points today. And just another two $10 day moves would have you up at break even in that case. This is one of the 8 ways that we talked about to manage a long call. Pause for a moment. Let me go back. I know we've talked about this before, Robert, but you might want to review this one. 8 ways to manage a profitable long call. If you choose to go this route, I know you're not in a long call, you're in a bear call credit spread. But once you do that and the stock starts to move up, you might be able to manage it a little bit better if in case your expectation is it's going to keep going up. One of my favorite ones that we discussed the other day during our coaching session, of course, is the pendulum adjustment. I'm going to leave the 272 where it is. I'm going to sell to close the 275, pay a fair amount of money to buy the 270. If the difference in these premiums and my cost basis and the original net credit we received is less than the difference in strike prices of 250, we're going to be looking pretty good. We're going to sell to close this. So we're going to be around 1490, and we're going to pay about 1750 for this. Oh, that's going to be tough. Even with the 66 cents initially. Oh, it didn't add it. My apologies, folks. Sorry for the scrolling. Here we go. So this is the pendulum adjustment. We're swinging the long. Oh, sorry. Yeah, okay. So sell, buy. There we go. So sell the 275. There you go. That's a possibility. Is it a great return now? No, I know. You're looking at a much higher return of 66 cents. This is only 22. If your sentiment is that you're still bullish on this position, what did we do? Remember, we had this bear call credit spread here with a 275 strike and sold 272.50. We had about a 60-cent return on the position. Sorry about that. What we did is in one move, by closing the protective long call and swinging it down here, we turn the credit spread, a bear call credit spread, into a bull call debit spread. We still have a $2.50 strike difference, but our cost is $2.28 into the position. So we can still get $2.50 back. That'll be our profit of $22 if the stock remains above $272.50. Now, stock's moving this much, and you're right sort of at the money in these cases. It could easily swing back down because we're only 2 or 3 points out of the money now. If it swings back down to 265 or 264, you're going to lose on the bull call debit spread. You're going to take the loss on that position as well. This is another opportunity, though, to use the pendulum adjustment because you still have time, 14 days to go. Of course, we could always just do nothing, depending on what our outlook is for the market going forward in that case, if you think it's going to pull back. What was the reason for this movement? Mirage has, I guess, a bullish outlook on it from his questions that he was asking on YouTube about the married put and using this kind of example here, looking for a proper setup. So he's still more bullish. And this stock has had large gaps with some little hesitations in it, but it's been moving up significantly in the last few days. So it was on this decline. And I think it was here that Mirage asked this question on YouTube about this a few days ago. Well, yeah, it's probably like 5 or 6 days ago. And since then, you've seen it jump from 255 to 270, kind of went up almost to 285, came right back down to 270, came right back down to 255, then today is up to 270 again. This thing is all over the place. And I don't know if it's found a trend that it wants to keep. Yes, it has a positive MACD now crossover, but it's still just been going up and down, which is why it hasn't started to break above the divergence line in that case, why it's not holding above the 20-day moving average. So are there options to manage this position? Yes. Would I try to convert this into a butterfly by doing a bull call debit now? By, let's say, selling, does it allow me to do this? I think it does. By selling another 270, 250 call, that price, and buying a 270. I'm entering into a call butterfly. I apologize. I think I said iron. So we're going to sell another one of these. We're going to buy one of these. That doesn't look too unattractive, except for the fact the graph looks great if it comes back to 270, 250, but you're still already beyond the maximum loss. Is the maximum loss lower in this case? Yeah, you've lowered it to only $73 with a potential to make $177. You added a bull call debit spread, keeping the same short strike, but paying a high debit for that 270. Again, now we have two ways to lose. If the stock falls below 270 again with all this movement, or if it stays above 275, but the max risk is 73. Yeah, the potential in one instance, in one chance at expiration, if the stock's trading right at 270, 250, could you make this $177? The way this stock is moving, I don't even know what the expectancy is of the stock being in these ranges in the next 14 days. So that's something to consider. So what do we have? Unfortunately, you're not near maximum loss in the position because you still have a lot of time value remaining on the trade. But for the original position, we saw some opportunities, Robert, as we discussed on our coaching session here. We did see the opportunity of number one. We did see the opportunity to buy to close the short, which would leave you in a long call with, yes, a high cost basis, but the break even in 14 days was at 290, only 15 points away from where are you from now. That sounds like a lot, and it is a lot. But again, we just see a move of 20 points today. We saw a move of 23 points down the other day, and another move of, I think it was 16 to 17 points the day before that. So buying to close the short, leaving the long open, if you think the stock is starting to show you that trend is going to continue these types of strong movements in the next few weeks, that's something to consider. We did see the potential to do a pendulum. Of course, we can't do it now, and we have to wait to see what happens on Monday morning. But again, that is a potential, is to use the pendulum adjustment, move the 275 to the 270, change it from a bear call credit to a bull call debit with a profit. The butterfly, I didn't like it because the way this stock is moving, the expectancy of it trading, right at 270, 250 in 14 days from now, it could happen, of course, but it's going to be very difficult. It did lower the risk to only $73, but you're already in the full loss zone if it keeps going up or stays where it is in the next 10 to 14 days. 4, of course, well, you're doing this anyway because you have to, because here we are at Friday evening, but it's do nothing. Wait to see what happens maybe Monday or Tuesday. If it really continues to start ramping up, if it gaps up another 20 points on Monday, there's not much you're going to be able to do in that case. The pendulum probably won't work anymore. You could buy to close the short and leave the long open. but now your break even is probably going to be up at 310, 315, somewhere in that range. The butterfly probably won't work unless you move this whole spread up to a higher strike and then try a butterfly repair. Very difficult to do. Could be potential though. So we are in the do nothing phase naturally. Have to see what happens Monday morning. But you see that there are opportunities there that we looked at. The butterfly, if you thought it was going to pull back again. But remember, that still puts you in 2 ways to lose on the position. Okay. And as before, Robert, there are full discussions also on our YouTube channel on managing bear call spreads. 8 ways to manage a bear call spread, I believe, is shown somewhere on there as well. It's an older presentation. We also have a review of 8 ways to manage the bear call, similar to the bull put, just reversed. You may be able to close this spread and take the loss you have now, which is not the full loss, naturally, because you still have time remaining. You might only be near 50% loss to 60% loss in this position if you get favorable prices. And you could convert it to maybe a bull put credit spread or a bull call debit spread if you think the stock's going to continue up in price from this direction. So close and do the opposite, but you'd have to work out the numbers based on what you get filled on in that case. So I just want to remind everyone, of course, that today's material are my thoughts and your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct trading recommendations or trading suggestions. They were used for example purposes, graphing, and analysis. Options involve risk, which we just spent a fair time discussing and the reasons why, and it may not be suitable for all investors. Now, today we got to cover a little bit on the search tool. We actually didn't look at the portfolio tool today. We did take a look at some of the calculator tools as well. However, if you like the tools that you saw, remember, you can take a 14-day free trial at any time. Just go to powerup.com. All you need is name and email address. No credit card is required. You'll have full use of the site for 14 days. After that, subscription levels start as low as just $45 per month. That's for the end-of-day data. Most popular subscription level, of course, is the delayed data service. It's 15 minutes delayed or so. It's $65 per month. And, of course, we have other levels of service there for real time and beyond. There's no contractual obligation. You could cancel at any time. Free coaching is available on all levels of subscription. You can also upgrade at any time, and subscribers get full access to the webinar archives. Speaking of which, of course, remember, you can access those archived webinars at any time. If you go to powerup.com in the free webinars, you can toggle through our discussions on the Power Options Tools presentations, options strategies discussions, options concepts and broad market concepts, and the requested topics. Currently in the requested topics section, all the full hour, 10 minutes, hour, 20 minutes, open discussions from the last 4 Fridays are available. We'll probably have this actual full discussion up, not separated out into segments, but the full discussion up maybe 8, 9 o'clock tonight Eastern time, somewhere around that time frame. Or just go to our YouTube channel as we looked at a little bit earlier. Find us on YouTube there, go into our videos and search by what you're interested in. Debit spreads, credit spreads, poor man's covered call, diagonal spreads, covered call, buying options. Just look under those topics and you'll see a list of discussions and more. If you think of any other questions at any time, remember, send us an email at any time, support@powerup.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. And as I mentioned before, trial members and subscribers to Power Options can schedule a coaching session at any time.